If you are a serious property investor, you have to know what a second tier lender is and have good connections in that space. This whole video is around my opinions and just things that I've done in my experience. I am not a mortgage advisor or financial advisor. These are things that you guys can look up online. What is a second tier lender and how does it work? So in one sentence, a non-bank lender that is perfect for property flippers. I've been using a second tier lender for the last 5 years on numerous flips that I've done, and they operate far different than a main bank. So a main bank in New Zealand, you'll know ANZ, ASB, Westpac, BNZ. Then you've got the second tier lenders, which consist of Base Corp, Finbase, Resimac, Pepper Money, Avanti, and numerous others. And what they're perfect for is speed and efficiency. These type of second tier lenders do not have to listen to the rules that most banks have as per government law. They can do things where they can really get to know the individual person and they can base their lending off their experience and the deal. Most banks do not do that. Main banks go off the numbers and just the property deal, not the person who is behind it. And that is why most people get frustrated using main banks when it comes for deals that require speed and a little bit of trust. Where you would use a second tier lender is if you wanted to do a cash unconditional offer on a house that a normal bank would not lend on. You could look at a leaky home building where you might be able to get it for, say, below half price, and even then a main bank might not lend on it. A second tier lender could. When your servicing isn't the best, and this is the most important one for people that are going into doing property flipping, a lot of them want to quit their jobs and do it full time. I've made numerous videos beforehand saying that that's not really the best idea to do that in this current market. But if you were going to do that, second tier lenders do not pay as much attention to your servicing, your regular income, as main banks would. And this is solely because a second tier lender predominantly used for buy, renovate, and sell. There's normally a 6-month or 1-year mortgage against that property, which you're telling them, I'm not going to hold this long term, so they don't have to stress out your income and your expenses like a main bank will. A second tier lender doesn't just do all of these advantages for nothing. There are higher fees compared to the main banks. So the main banks on a residential mortgage is the cheapest place you will get money in this country. A second tier lender will go around about 7.9 to maybe 8.5% as of today. Other things that banks don't charge you on. So a main bank pretty much pays you for you to take their money. They give you something called a cashback, and right now most of the main banks in the country are doing $5,000 cashback if you're borrowing over $250,000. A second tier lender do not get paid that type of long-term trail as a 30-year mortgage would do. So what they need to do is collect the fee up front, and they collateralize that on the loan. So say you were borrowing $300,000 to buy a house that's worth 600 or something. So what they would do is they would charge you most likely a 1.5% lender's fee, and that is because if you bought that house and settled on it, then a week later someone else bought it from you straight away, they would earn bugger all interest for that week. So they've done all this documentation, all of this due diligence for you in the deal for a week's worth of interest. That's nothing. So what they do is they take the 1.5% fee and they charge that on top of the loan. So they're at least making $5,000 or whatever that equates to instantly on the deal. When you go to a main bank, the broker actually does get paid from the main banks. So they will get their trail, their income coming in, which will service them on a monthly basis. And when they do the second tier lender, they normally charge around a 1% fee. Some lenders charge a little bit more depending on how much work they have to do on the deal. You're looking at an average of 2.5% finance fee on any amount that you're taking from a second tier lender. And most flippers need to make sure this is added to their numbers. And then you get charged the 8% on average holding cost fee that happens. Now all those fees are capitalized on the loan. You don't pay it up front. You can continue with your deal and move forward. The other thing that second tier lenders are very good for, on a sale and purchase agreement, sometimes when you're dealing with difficult vendors or a very difficult property, as is, where is, there's been numerous issues with the house, EQC damage, leaky things, broken into, there could be a lot of ugly terms and conditions crossed out on the sale and purchase agreement, a whole bunch of vendor protecting clauses, and a main bank is going to have issues with this. And so that's where a second tier lender will come in and require more information. And as I said, they will lend upon the experience of the person, then they can get around that regardless how messy the sale and purchase agreement is. But of course, you have to check this. Some banks, especially when they're doing private sale purchases, they require a registered valuation solely because the main banks do not have anyone that's regulated to give them eyes and trustworthy towards this property. It hasn't been under a real estate agent. It hasn't got any marketing photos. Say it's just you buying your neighbor's house. The bank will then make sure there's a registered valuation in most situations, charge you maybe $1,000 to $1,500 for that valuation, so they have someone that is regulated give them correct feedback on what the house is like, full photos, full report, and they know the house isn't stuffed. Bank is giving their money against the property. A second tier lender sometimes does not require registered valuation, even in a private sale, which is great because you don't need to do 10 working days for finance, and you can also save yourself on those upfront costs. So those are some key things of why a second tier lender is great to use, especially if you're a property flipper, and how they differ from main banks. You have to have a great mortgage broker and someone that can help you find the best type of deal. If you want help with that, make sure you book a call directly with me. We've also got connections inside the Investor Pro platform at investorpro.co.nz. So click the link in the description to find out how you can get in touch with me or a great mortgage broker to help you. If you want to check out any of my other videos, make sure you click here, like the video, and subscribe for more videos.